Moving on, yields and treasury bills are higher today on the back of an OMO auction. Nnamdi Nwizu, head of fixed income at Citi Nigeria, joins me in the studio to review the fixed income markets today. Thank you so much for taking the time out to join us, Nnamdi. We didn't see, the market was relatively quiet yesterday talking about the treasury bills market, the bond market also, but we saw a bit of an uptick today. What's the sentiment and where are we seeing demand?
Well, basically what happened was that there was an OMO auction today. So the expectation of some sort of liquidity mop-up led to yields moving higher on bonds and T-bills. T-bills in particular, especially at the short to mid-end of the curve. But the end of market realized that central bank ended up not selling anything at all at the auction. So tomorrow, most probably see yields come down marginally, maybe about 5-10 basis points at the short end of the T-bill curve.
Yeah, I mean, I get a sense that there's still, mood at the market is lackluster. There's this fever malaise, if we want to call it that, from the equities market, obviously all pointing to the fact that the markets are waiting for the May 29 handover dates and what's going to happen beyond then. We're going to have a clearly articulated economic policy and how that's going to affect the economy, the business environment, and markets. So, what do you think foreign investors? How do you think foreign investors are interpreting our current situation, the macro economic indicators as they are right now?
Well, first of all, with the fixed income market, we've seen quite a bit of a move this year. We've seen yields come down about 300 basis points from 16.5 levels to about 13.6, 13.7. So that's been quite a move already. Typically, when you have such moves, after a while, people now sit down and try and reassess where we are right now. With regards to offshore investors, I'm sure they will have one eye on reserves to see how the reserves start to accrete, if they start to accrete, and also like to see the economic policy focus of the new administration coming in. So by the time we have President Buhari, or incoming President Buhari, resume office on 29th of May, then we'd like to see what exactly they intend to do and what they have in store for us. And I think that will be another a big deciding factor for the market.
Obviously, in terms of providing a direction. Now, there's been a lot of talk about the fact that the incoming government perhaps has to find very creative and sustainable ways of boosting revenue. Obviously, oil prices are still quite depressed at the moment. And looking at the total debt stock right now, 12 trillion, over 80% of that is domestic. So perhaps one is not even expecting the government to lean more on domestic borrowing and perhaps focus more on foreign borrowing. But in terms of that, what are investors expecting, particularly offshore investors?
Well, what we're hoping is that they will be able to plug some loopholes that you have. Basically, if you have some leakages in government with regards to income and revenue, we hope that we'll be able to see them plug some of that. With regards to offshore borrowing, it's not as simple as that, because before you borrow offshore, you need to get National Assembly approval. And considering the fact that not long ago we just got off a debt relief from the international community, I'm not sure we'll be so eager to jump into that again. So we might look to local debts in the short term. But even with that, we still have to watch it. We've had them talk about Nigeria's debt at $60 billion. I'm sure they will also not be too eager to start to pile on debt in the short term. No,
okay, well, I wish we had more time, but we're going to have to leave it there. Thank you so much, Nnamdi, for talking to us.